Love of money, trading woes, unveiling the root cause. Good morning, fellow traders. Buckle up as I unveil the mysterious force wreaking havoc on your trading journey. Picture this: a colossal obstacle, a sinister beast, a sly and mischievous companion of ours. It's stealthy, it invades our lives, appearing uninvited, and if you observe the world closely, you'll notice it's the source of many global predicaments. Fail to confront this intruder, let it linger in the shadows, and you're dancing with danger. This fire, my friends, has the potential to scorch your very soul. The culprit, whether he, she, or it, is none other than the notorious love of money. It's time to usher it off stage, exit left before it sets your trading dreams ablaze. The temptation of wealth. As traders, you possess a mindset beyond the ordinary. You're a visionary with grand dreams that defy the conventional. I may not know the specifics of your financial ambitions, but let me share a glimpse of mine. To attain financial freedom, to craft a life of my choosing, to ensure my wife's retirement from the grind, granting her freedom from labor. My vision extends to the ability to move at will, supporting others, contributing to environmental causes like rescuing baby seals and cleaning beaches in my legion and aiding the homeless. However, at its core, it's about embracing freedom. Working for others, living someone else's dreams feels like a form of enslavement to me. Your dreams and motivation for trading may vary, but I urge you before entering any trade, delve into the profound reasons behind your pursuits and contemplate the potential consequences of excessive risk taking. Trading realities. Starting with limited capital, many traders turn to prop firms for high leverage brokers and profit potential. I advocate for prop firms due to their daily loss limit, ensuring emotional impulses don't lead to excessive risk. Sharing my journey, I initially traded gold, turning a $500 profit in one day. This success funded a life changing studio session. Amidst ups and downs, I once made $20,000 in 2 hours. A dizzying experience, challenging the traditional career paths. A wealthy acquaintance advised me to make money in your sleep, leading me to Forex. The emotional roller coaster of newfound wealth hit hard with the ambition driven highs, followed by a devastating $20,000 loss in a day. This underscores the importance of checking the love of money before entering trades, as unchecked emotions can be your downfall. While I support prop firms, it's crucial to understand that they are indifferent to your losses. Prop firms won't reimburse you for your failed challenges, and they certainly won't hand out money randomly for your losses. In the realm of prop trading, there is no sympathy. It's a business designed to generate profits. Their success hinges on your emotional reactions, leading to financial losses, making it the most expedient route for them to turn a profit with minimal effort. The prop firms operate with a business model centered around their consistent success. Typically, you'll encounter a 5% daily loss limit with a 10% overall drawdown of the entire account. This forms the core business model for most prop firms. While some variations exist, such as holding trades over the weekend or different leverage options, the predominant theme revolves around maintaining a 5% daily and a 10% overall limit. Achieving this as a trader is commendable, considering the challenge it presents. While some may manage it in a day, for many, it's a gradual process. Attempting a 10% gain on a $200,000 account within the day is not advisable, as it can intensify emotional trading. Let's analyze the charts to identify the optimal setups for achieving these targets. Okay, traders. So, speaking about being successful in the market, noting on how to pass these prop firm challenges with these tight loss limits. So just looking at the chart, of the Euro USD recent price action for the week. All right. We can see that price was here on Thursday, January 11th, 2024 to Wednesday, January 17th, 2024. So as a trader, where do I want to be? Do I want to trade in this area? No. Do I want to trade in this area? No. I want to execute my trade here, and I want to get out of my trade around here. All right. So with that being said, that's how we want to trade. Now, are there traders who could make millions of dollars here? Yes, but it depends on your capital. How much money do you have in your account? These prop firms, on the high side, will give you a $200,000 account, right? They'll give you a $200,000 account, but what they're banking on is your emotions. Most likely, most traders blow their account. That is just the business model. So how do we approach these markets? How do we pass these challenges? Okay. So we must put a plan together to calculate our risk and see what the market does on a weekly standpoint to give us enough pips to pass these challenges. We first must start off by analyzing the market from a top-down analysis, executing the trade, and exiting the trade once we reach our potential target. So as a trader, I want to figure out, how do I get here? How do I make the call in my trading analysis to execute a trade here and ride it out? Because if we measure this from top to bottom of last week, right, that gives us 154.7 pips. Let's just call it 150 pips, okay? So we'll go into our calculator and say, for the Euro USD, I need 150 pips, right? Because remember, we have to make at least 10% to pass the first stage of the challenge. We need 10%. Most prop firms want between 10 and 8%, but let's just call it 10%. So $1,500 with one lot. 150 pips with one lot gives us $1,500. But with that being said, what's the maximum amount of dollars that we can lose during our challenge or our verification stage? Well, let's just stick to the challenge part. We cannot lose no more than $5,000 in one day. So as you can see, that the market from high to low gave you 150 pips with a one lot. You can make $1,500. So for that's 1 week, and I believe you can pass in a week. I've done it in a day. I do not recommend passing these challenges in a day because it's going to take a lot of risks for you to pass that in a day, and you're going to have to be right. Normally, traders are wrong statistically when it comes to these markets, all right? So we want to approach it in a smart manner. Now, $1,500. So we need 10. So let's say we did a 9 lot or maybe an 8 lot. Okay. You can even go to a 5, to a 7, right? Because you need 10. But what if we went to 6.5? Nope. 6.6. A 6.6. Nope. Okay, let's call it 6.7. That's kind of tight. Let's call it 6.8 lots. You're going to need a 6.8 lot size to win. So if I would have executed a trade and I had 6.8 lots, all right, for the week, you would have passed the challenge, but it would have took you a week to do it. So do you have a week? Are you that patient to pass the prop firm challenge in a week? I recommend you taking your time and doing it in a week. Because with a 6.8 lot size, knowing that how the price moves, for example, let's go back into the charts. Okay. From this sell-off point, if we would have said we're going to enter at what was that, Thursday high? But even if you came back to Friday high, right? So you came back into Friday high because you're a smart trader. You know that the market has to feel that huge order there. Just say, for instance, if you got in on this high, right? And you said, I'm going to open up a short position and I'm going to target, I'm going to target to this area down here, and my stops, I'm sorry, give me a second. Say you enter something like this, I don't know. But say your stop loss would be around 30 pips, something like that, right? You're good. That's how you want to trade the market. Because with this trade, if you would have executed it, you would have made profit, you would have hit your target, you would have passed the first phase. But it's going to take a week for you to get, for the market to give you that, all right? It's not going to give it to you in a day. The market, 9 times out of 10, if you try to pass these prop firms the right way, the market is not going to give it to you in one day. It's going to take some time. So with that being said, you have to use proper risk management. You have to be patient. All right. So let's see. You're risking 30. Let's see. Yeah, 30 pips. You're risking 30 pips. So let's see. How much is that? If you okay. Out of the 10%, 30 pips, you risked $2,000 to make your $10,000. All right. So you could have entered that trade, 5 times? You would have 5 tries to get it right to pass in a week. And that's where I want to be. I don't want to be I don't want to be doing something crazy, because it will, with a large account like that, they will allow you to do something crazy like this, right? Say if you're like, I just want to pass it as quickly as possible, and that 30 pip. You're done. You're done. All right. If price went 30 pips against you, you are done. They've counted their money. They made their profit. You're stressed out because you just lost the $1,200 to $1,300 that it costs to open up a challenge. So with that being said, I hope you took something away from this lecture. Guys, it's important to trade with minimal risk as possible. And when you're looking at the market, you want to look at it from a weekly standpoint. You want to catch the trend of the week, right? And I'm giving away a strategy in this lecture right here. And here's the strategy. You ready? So you want to look at Friday's high and low. And normally, not always, but Friday's high and low sets the tone of the next week. And let me show you if you don't believe me. And we can go to any asset and we can see that Friday's high and low sets the trend of the week. You know, I'm not saying it's 100% a sure thing, but let me open up my chart all the way so you can see what I see. Okay. Let's remove this. And you can see if we go to Friday, any Friday, we go to Friday here. Friday made a low. Friday made a high. Monday came into play. Price went into the area of the low. Touched it again. You got probably double bottoms, triple bottoms up here. That's where you want to be. Boom, 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 boom. It'll give you that. Let's go to another Friday. If you think I'm just making up stuff. So this Friday right here. Friday made a low here. Broke the low again. Change of structure. Change of character. Went up and tested the Asian high. Went down again. Went up and tested the Asian high again. And you can see that price, this level for the week of Friday, December 23rd, price couldn't break above that high. Came down for the week. Boom, 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 boom. That's what we want. So let's look at the bullet structure, okay? And this is free game. So on Friday, price made a high, came to a low, made a high, broke that high in the London session, came back down, went high, closed in the previous high, right? So look at Tuesday, boom, 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 right? Broke it, off to the races in the bullet structure. So if you're looking at these prop firms, something that you want to check, please check Friday's high and low and be patient. Look at the market from Friday's high and low as an intraday trader, because Friday high and low generally sets the tone for the week. And you can see in this Friday example, and I just showed it to you. Let's check another one. Let's check another one. Here we go. Friday. This is the London session. Price opened up, made a high, came low, tried to get back up to that level. Boom, 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 boom. So that's a huge gap. Price needs to come back into this area, this fair value gap, and check that area for the week. So Monday opens up. Boom. You need to be paying attention to the highs and lows of Monday and see where price can potentially go. Because in this area on Monday, price came down, didn't break it. Price came down again, didn't break it. Price came down again, didn't break it. Price came down again in the Asian session on Tuesday, didn't break it. That's where you want to be. Boom, 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 boom. Look. Still didn't break these lows. Boom, 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 boom. And it ended on Friday at a new level. Made a new high. All right. So thank you for watching this video. You've done a great deal of service to yourself and your trading. I hope you take something away from it. And on TradingView, I would like to thank everybody who's been contributing and commenting. Please keep the comments up. These videos are expensive for me to do. All help is greatly appreciated. Thank you for watching my channel, and please continue to use proper risk management. This is Joe Malone of District Effects, and I'll see you on the upside. On the outro, I want to thank you guys for watching. Please remember to comment, share, and subscribe. All your views and interactions help my channel. Thanks again. See you on the upside.